Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live core conversation brought to you by Red Cloud Financial. I'm your host, Mark Bunting, the host of RCTV. This is the third of 5 live core conversations that we've been doing. And this is where we talk to thought leaders in the mining sector about various aspects about commodities and mining, and we learn a lot. And today we're going to be talking about silver. Let's bring our guest in straight away, Maria Smirnova. She is Senior Portfolio Manager and Chief Investment Officer at Sprott Asset Management. Maria, thanks for joining us today.
Hi, Mark. Hello, everyone. Thank you for having me on this platform.
Absolutely. We're looking forward to this. And as I ask my first question, we're going to bring up a graphic here. This is from Visual Capitalist. I think it's came out about a year or so ago, but it does really show you the relative size of the silver market. If you look in the lower left of the screen, you'll see that the silver market by this measure is bigger than the likes of lead and molybdenum and palladium. But then on the upper right, you see it's much smaller than copper and the gold market and nickel and other metals as well. So Maria, just to kick things off here, can you remind us about the relative size of the silver market and how that is can be advantageous and sometimes is a disadvantage?
Yeah, I think this is a great place to start, Mark. The silver market, as you saw in the graphic, is relatively small. The physical market in silver annually is about 1 billion ounces. Demand has actually been exceeding supply. So depending on what side of the equation you look at, it's between 1 and 1.2 billion ounces. Really, when silver trades at about $27, $28, you can do the math easily. It's about $30 billion market. It's not a big market by any stretch of the imagination. And especially when you look at other metals such as copper and, gold, et cetera. So there are pros and cons, like you said, Mark. Most importantly, I would say that it's easier to push the price around. That is why silver is more volatile than gold, for example. But, we'll get into the supply-demand fundamentals for silver. It also means silver is harder to find, frankly. And therefore, it is a precious metal together with gold and platinum and palladium. So it does have its pros and cons, but here we are to talk about the cons of the metal going forward.
All right, so it's believed to be, not believed to be, it is a precious metal. It also has its industrial uses. So on a day-to-day basis, is it possible to gauge why the price is moving? How much is industrial demand? How much is speculation and investing in silver, just in and of itself?
So yeah, unfortunately, it's difficult to get day-to-day information on a lot of the metrics, particularly on the industrial side. We really get supply-demand numbers from Silver Institute a couple of times a year, and outside of that, we need to try to use other, indicators to see what's going on. So on the industrial side, what we can look to are things like PMIs. Manufacturing activity, basically any indicator that tells us about, manufacturing activity in the world, especially in China. So China's been more and more active in the silver market because of the solar segment of the industrial use. And they've been consuming more and more silver. So we can look at trading activity in Shanghai for silver. That's one indicator that is more frequent. We can see what's going on, what traders are doing in Shanghai. And then on the investment side, also, we can look at coin sales to gauge investor demand. We can look at ETF information that is more readily available. But things like, again, something like jewelry consumption, that is a little bit more challenging to get data on. But there are some indicators we can look to for sure.
All right, and we'll get back to some of the facts and figures you mentioned there in terms of supply and demand. But I just want to ask you, we know that gold, part of the gold narrative is the U.S. debt and deficit and a U.S. dollar being devalued, and so gold looks attractive as a store of value. Does the same pertain to silver? Can it be a hedge against inflation, as some people believe, or not necessarily?
Well, of course, you bring up a great point. Gold is most entirely consumed in investment and investment-like uses, such as jewelry, such as bars and coins, ETFs, etc. So, of course, is one of the old, both silver and gold are some of the old currencies of the world. In fact, I don't even like to call them commodities. These metals are currencies in my mind, because that's their roots, that's their history. So for gold, it is really truly tied to anything you think about for investing. And again, some of the drivers recently for gold, a big driver for gold demand, have been central banks buying physical gold, especially, again, China, other developing countries, countries in the Middle East, etc. Silver is a metal of two heads, as we've touched on already. So it has its own dynamics. However, I would argue that that side of silver, that is investment side, it does tend to correlate to gold as well. And again, we do look at things like ETF sales. We do look at things like bars and coin sales. So these are very important factors in silver. And I think, our outlook right now from a macroeconomic point of view is that we do think that the slowdown we're seeing in the US and other Western countries will continue. We can argue about a soft or hard landing. We do think the Fed will finally pivot and start reducing rates. And I think that brings a very positive view to silver as well as gold. So I do think that it will benefit from the macro drivers that gold is going to benefit from.
Okay, Maria, you've said that investors don't generally realize the impact of the fact that there is a lot of demand for silver now from the electric vehicle market, solar and wind, which you touched on. So can you give us a sense of the incremental demand from the greener economy? And do you think investors are starting to pick up on that now?
Yeah, I think that is coming finally. It's frustrating to me that silver doesn't seem to be on any of the countries' critical minerals lists. For example, it's not on Canada's critical minerals list. It's not on the US critical minerals list. And that is frustrating because, to me, silver is a critical mineral because, like you said, it is used in solar. It is used in electric vehicles. It is used in anything because of its wonderful electricity conductivity properties. Silver is used in anything electric. So, some numbers, for example, of course, the biggest one is solar, like we said. And as of last year, solar represents about 200, it depends what number you use, but there's several numbers floating around, but about 200 million ounces of consumption last year. Again, remember, the supply of silver is 1 billion ounces, meaning 20% of supply went directly into solar use. I would say that is very, very significant. Going forward, predictions are that solar panel installations will continue to grow. Some of the newer technologies in solar, by the way, the panels actually use more silver than the old technologies. So that will contribute to the growth in the solar space. So we would predict that that 20% will only continue to grow. Then you add to that electric vehicles. Now that usage right now is not very big. I'd say it's about 5% of the market, but again, projections are for that to grow. And interestingly, electric vehicles have higher silver loadings than internal combustion engine vehicles. And the reason is, again, anything electric, anything requiring to conduct electricity, any components that are automated, automation plays a big part. That increases silver loadings as well. And the third area, of course, is 5G networks. And we've written about this as well. And these are your phone going from 3G to 5G to 7G, again, will require more silver. It's a smaller component again, but it's just demonstrating that these kinds of uses will contribute to growth of the silver demand.
Right. So all of those areas you mentioned are really buttressing demand for silver, and there are sort of new pillars for silver in terms of demand over the past several years. Overall, how would you characterize the silver demand equation right now?
Well, I think the industrial side is gaining ground for sure. In the past, I would say that industrial demand is the backbone of silver demand. And then the investment side, it provides that torque, because investment demand is much more volatile year to year. Sometimes we have investors interested in the metal, and sometimes we don't. So that those numbers swing up and down. Recently, like I said, we've had outflows from ETFs, illustrating to us that Western investors have no interest in silver. And we're still waiting for a turn in that. But I think, like I said, I think it is coming with a different economic outlook. So, and I've mentioned that China has been playing a bigger and bigger part of the market. So that dynamic is there. But I think as solar is growing, as this electric stuff growing, industrial demand is going to contribute more, more than 50%, 60%. So that backbone, if you wish, is going to be more and more important and will stabilize the price of silver. And if you want me to get into the supply of silver, that's a totally different conversation. And what we've seen there is actually a stagnation of supply. We've not increased supply of silver annually in about 10 years. So that is why we're seeing deficits in the market. And that is why that as demand continues to grow, the fundamental demand will have a bigger and bigger shortage of silver annually.
All right, that's very interesting. Now, Maria, in terms of the price, one can argue that silver has pretty well kept pace with gold the last 5 years or so. But when you look at the gold-silver ratio, and just to backtrack here, we know that silver makes up about 16 to 1 in terms of how it's found in the Earth's crust. And yet the gold-silver ratio is in the high 80s last time we took a look. And if you X out the pandemic, that's the highest level for that ratio going back to the early 90s, and then even going back further to the Second World War. So are there any explanations as to why the gold-silver ratio remains at that level, and what will it take for it to come lower? Because it has been much lower over periods of time historically.
Yeah, so I'm not sure why it's not gone back to 16 to 1, but it has fluctuated, to your point, between about 40 to 1 to 100, as high as 120 to 1. So in COVID, just before COVID, actually, it hit 120 to 1. And that's when everyone wrote silver off. I think one of the reasons is, until recently, we had a lot of silver inventories. It is now, though, that we're seeing silver inventories on the exchanges, such as the LBMA in London, dwindle. We've lost something like over 450, close to 500 million ounces out of inventories in the last couple of years, 2 or 3 years. That is what is very significant to me. And it's happening because we've been in deficit. So that's something that we need to continue to see in order for the price of silver to really take off and catch up with gold. But again, if we're seeing some negative industrial news, not industrial, but economic news indicating a slowdown in industry, that will negatively impact silver. And that's what's happened very recently. But a longer term, I think the fundamentals for silver, the demand supply fundamentals, I should say, for silver are very strong. So as we chew through the inventories, I think that that ratio will decline and silver will gain ground versus gold.
Still with the price of silver, silver bulls love to talk about the big run up in 79.80 when the Hunt brothers tried to corner the market, and then the big run up in 2011. And often they'll say, oh, a big explosive run is coming soon. We hear about $300 silver. And so, I mean, my thinking is that let's deal with $50 an ounce to start with, and then we can talk about 300. But do you think that? Sorry, another point here is that, and this was pointed out to me by the CEO of Dolly Varden. If you X out those big spikes going back to 1980, silver has just slowly but steadily risen. So is that what investors should look for when they're investing in physical silver and or silver companies, is that slow and steady growth? And if you get an explosive run, great, but don't expect that to be right around the corner all the time.
Well, yeah, I don't like anyone cornering the market, or, we had back a couple of years ago, we had another Reddit event, to your point. So it's tough when the market can be so volatile and the price can be so volatile. People get excited and then they get let down. If anything, what that does is turns investors away because they just don't like that volatility. But I also would say that silver right now, as we've discussed, is very undervalued versus gold. And so I don't want silver to act just like a, kind of an inflation hedge, in the sense that it just protects your devaluation of the fiat currency that you have. I do want silver to gain ground because it has definitely great attributes and good fundamentals for it to do so. So somewhere, I guess, in between those two.
Right. Okay. Fair enough. Now, in terms of silver companies, you said that Sprott's sweet spot is in the small to mid-size silver companies. Is there something about larger producers or developers or explorers that aren't as appealing as the small to mid-cap type companies?
Well, I think when you say explorer and developer, by definition, these are the smaller companies. And what excites me, and I've said this for a long time, I'm kind of on board with Mark Bristow on this. Exploration is the bloodline of this industry, right? For mining, we need to explore in order to not only maintain production, but to increase production, right? So I'm a big believer in exploration, and that's where the small companies come in, right? They raise money to drill, to explore, and to find ounces. There have been some good success stories recently in the silver space with discoveries, with coming up with good sized resources and putting mines into production. And I just love seeing those success stories in mining, and I just hope that continues. As I said earlier, the interesting part about the silver mine supply, it's been flat to down actually in the last 10 years. And in fact, the Silver Institute projects a decline of about 1% in supply this year. So from 2023 to this year. And this is post-COVID now. Now we're coming out of a COVID low when mines were shutting down. We are expecting an increase in supply, and yet we're just not seeing a reaction that we were, I guess, hoping for. Now, the flip side of that, of course, it goes back to the deficits that I've talked about and a continuation of those deficits. So it should be good for the price of silver in the longer term.
Now, Maria, in terms of portfolio construction, if an investor is looking to either augment what they have already in terms of silver assets, or maybe start to nibble away and create a portfolio for themselves, I'm sure you're familiar with Peter Krauth, who wrote The Great Silver Bull. We've talked to him a few times. He recommends for an investor to have a diversified portfolio of about 10% physical and then 50% made up of ETFs, royalty and streaming companies, and large producers, and then 20% growing producers and developers, and 20% explorers. Does that sound like a reasonable mix? Would you be more concentrated in other areas?
So first of all, I read Peter's book. I found it a really great summary of the silver market. Now, in terms of making recommendations and portfolio allocation, I am not an investment advisor. And in fact, I'm not allowed to make recommendations. What I would say is that every investor has their own objectives, different age groups, etc. So I think as an investor, you have to be comfortable with volatility, and you have to pick your point of physical will be less volatile, stocks will be more volatile. Stocks obviously have leverage both operationally and financially on the price of silver and other metals. So you kind of have to be choosing your comfort point, I guess, in that regard. So I know that's a roundabout answer, but I think it's very individual, and there's not one approach that you can take with portfolio allocation.
Right, that makes sense. Now, I'm going to ask you to sum up your thoughts in just a second, but is there anything we haven't touched on here, or is there anything you want to expand upon about the silver market or silver mining?
Yes, actually, I would. I would like to make a comment on valuations in the mining space in general, both gold and silver. And what we're seeing is companies actually over the last, since COVID, really are trying to do a better job of capital allocation, making sure that they're not doing silly acquisitions. So more discipline shown. There's more emphasis on governance. So I think what I'm saying is we're seeing a lot of positive things in the mining space. And unfortunately, generalist investors are just not paying attention quite yet. We have not seen generalist investors move in a big way and allocate to gold and silver equities. And that is quite frustrating because we are seeing these positive signs in the industry. And I'm just hoping that once we have more and more positive results and companies delivering on their promises, the generalist investors will come. And of course, as we've talked about, the silver market is quite small, so it won't take a lot of money to move this. If you think the physical market is small, the equity market in silver is even smaller. So when there are good news, these stocks can move, contributing to that, spikiness. But yeah, we're actually quite positively inclined on the equities right now, as well as the physical silver market.
All right. A lot of your comments speak to the struggles and the frustration about sentiment over the past few years in precious metals and mining in general. Now, just to wrap things up, if you could just expand and summarize on your thoughts there in terms of why silver and silver companies should be strongly considered as investments by most people.
Mm-hmm. Well, it's easy to summarize. Just one word: rare. These things are rare. Good and silver producing companies in general are rare. And we're very comfortable with the thesis on silver, both from that macroeconomic perspective of, monetary and fiscal policies that we're seeing. Nothing's changing on the fiscal side, actually. And more so, we are convinced that interest rates cannot stay here. Interest rates have to come down, which should be positive both for gold and silver. And then on the physical and industrial demand side, we are just seeing these trends that are picking up steam as time goes on. And I think the train has left the station on solar, on electric components, all of that. And it's just, the world's not turning back around. So that is very positive for the fundamentals and supply demand. And again, of course, I've spoken about, again, going back to rare, unless we have more discoveries, unless we have more mines coming into production, that supply is not going to increase drastically. In fact, mines will run out, grades will come down, that will pressure supply down further. And so from that perspective, I think the outlook in silver is really positive.
Well, you make a compelling case, Maria. We really appreciate your insights today and your time. So thanks a lot. We'll see you again.
Thank you, Mark. Have a great day.
All right, you too. Maria Smirnova, Senior Portfolio Manager and Chief Investment Officer at Sprott Asset Management. Our thanks to her. Thanks to you for watching. We have another live core conversation coming next Thursday. Check that one out as well. We'll see you then. Take care for now.